Well, let's get an update on where the talks stand. I'm joined by Anna Ashton, Senior Director of Government Affairs for the U.S. China Business Council. Thank you for joining me.
Thanks for having me.
So this has been quite the roller coaster to try and follow, but we are hearing positive momentum coming out of Tuesday's phone call between the top Chinese and U.S. negotiators. What should we read into where things stand at this point?
Well, I certainly think it's good, as you said a little earlier, that China seems to be trying to keep trade on a separate track from any other issues that it's dealing with in its relationship with the United States. That indicates that we can still have productive discussion no matter what other events seem to rock the relationship, and that's really important for U.S. business. Also today, though, the president indicated later in the day that he might decide to hold up the negotiations in order to ensure that the U.S. gets a bigger deal than China does, which goes directly against China's key request that the deal be fair and even. So it's really hard to say whether we should expect a deal this year or not. I think probably we're looking at sometime next year, though.
And this uncertainty clearly has been ongoing. I mean, as of now, we still see the December 15th deadline for another tariff hike. Do we know anything about any plans to sort of de-escalate those tariffs with any of the existing ones?
Well, the good news is that Larry Kudlow in recent days has indicated that the two presidents might not actually need to meet in order to finalize a phase one deal. And that, to me, says we don't necessarily have to move forward with the December 15th tariffs, even if the presidents haven't met and signed a piece of paper. So I think that there is some hope that we won't see that tariff escalation on December 15th, which is good because every tariff escalation in the past has been followed by a bit of a freeze in negotiations.
And so you mentioned that a deal perhaps unlikely this year, given the pace of things that we're seeing. But in the meanwhile, this uncertainty, a lot of people are wondering who's really bearing the brunt of all this, because we saw that the U.S. Customs and Border Protection said that about 25% is being added to the import price of Chinese goods. But according to the New York Federal Reserve researchers, Chinese firms aren't raising prices, which means that U.S. companies and consumers are bearing the brunt. Do we have any sort of gauge of how much it's costing everyone?
Yeah, I mean, certainly for the entire year, we've been saying that our companies are feeling the pain of the tariffs and that it is getting harder and harder for them to absorb the costs without passing them on to their customers. And this sort of bears that out. I guess it is literally the case, and so not a surprise, that companies pay the tariffs at the border when they come through the ports. So of course, companies are paying the price, but the fact that it's not offset at all by any decrease in the price that they're being asked to pay does mean that they're carrying all of it and they're passing it on to some of their suppliers where they can, and ultimately they will have to pass it on to their customers. They can't bear the brunt of 25% on every single thing from China. It's just not possible.
And as we heard from one of the farmers in that earlier report, a lot of people are wondering then, can anyone actually win this trade war? Should that even be the goal, to sort of just win a trade war versus the sort of the damage it's doing?
Right, and what we would say, and what we've said from the beginning is, look, the problems identified in the 301 investigation and the 301 report, things like, tech transfer, inadequate IP protection and enforcement, and uneven competition because of subsidies to state-owned enterprises, things like that. Those are good issues for the U.S. and China to be discussing because they're issues that are difficult for American companies and other foreign companies operating in China. But a lot of these agriculture problems that we're having in our trade dispute, they weren't problems before the trade dispute began. Soybeans were being purchased by China before the trade dispute began. The pork market wasn't open the way that we'd like for it to be, but it certainly hasn't been helped by any of this, and same with beef or chicken. So yeah, I mean, I think that the bottom line is that there aren't really any winners. The US is not a winner in this situation. China's not a winner in this situation. It looks like we're more focused on trying to mitigate the damage at this point on both sides than really anybody winning anything beneficial.
And speaking of damage, obviously, when you have the two biggest economies in the world engaged in a trade dispute, there's only so much that's going to happen before it starts rippling through global supply chains. What is this doing in terms of then global economic growth and trade relations?
Right. I mean, you hit the nail on the head. These are the two biggest economies in the world. So, of course, it's going to affect other countries. Global supply chains are exactly that, global. And what we've been hearing throughout the year from organizations like the International Monetary Fund, the World Bank, the OECD is, stark warnings that if this trade war doesn't end, that the combination of the tariffs and even more importantly, the uncertainty that it's creating in markets is going to slow the global economy, the entire global economy. The predictions for next year from the IMF most recently are that the economy will grow at just 3%, and that is the same as the rate during the 2008 economic crisis.
Well, we certainly hope we don't see that repeated again.
Yeah.
Well, thank you so much. Great to have you on. Anna Ashton there, Senior Director of Government Affairs for the U.S. China Business Council.
Thanks for having me.